Gazillions of dollars have been lost in the global economic crisis. And it's hard to understand, like, what happened to them? Like, how can a world lose that much money? It's not like, well, another country has it all. Like, one country lost it and another country got it. Where does the money go in a global financial crisis like this? Does it just
Well,
disappear into the ether?
yes, it does. It's not, money is not disappearing in the sense of paper money is not being ripped up or anything. What you're alluding to, and of course what is absolutely on everyone's minds, is this big loss of wealth. So we had stocks that are now worth 50% or less of what they were worth. We owned houses that in many parts of this country and other countries have fallen in value substantially. The value of our cars has probably gone down as well. And then you sort of go down the list of all the various assets that we owned. The value of those things is less than what it was before. Now, you can say, well, perhaps it was exaggerated before. Perhaps it wasn't really worth that much. Well, that may be right. I mean, these prices move up and down all the time. The point is, people were banking, if I can excuse the pun, they were banking on these assets having a certain value, and that had implications for how much they were willing to consume, and if they were firms, how much they were willing to invest. And everyone now is revising down their views of what is a safe level of spending, and also what is a safe level of, or reasonable level of debt to carry. And that is happening everywhere in the world at the same time. This is why we have a big global slowdown.
So you're saying it's not that, like, paper money has been lost or that, gold has disappeared. It's just that the things we estimated were of one value are not anymore. It's all like values of things as opposed to actual cash.
Absolutely. And so if you could think about Harvard's endowment as an example, this is all in the public domain. It's been very much written about in the newspapers. So their endowment took a very big hit. I think they were in somewhere around the $30 billion mark, and they probably lost something like $10 billion. So it's a big amount of money. Now, you could say, well, look, that's just, it was on paper. That was the notional value of these investments, but you weren't trying to turn them all into cash anytime soon. And how much should you really I mean, Harvard obviously is not, the brand name is not affected, their franchise value is not affected, they still have the same loyal alumni. How much should they really change their behavior? And the answer is, at least in the case of Harvard, they think, or their view, is they should change it a lot. They say, no, we've lost a lot of value. We don't have a lot of liquidity in our portfolio right now. We need to scale back on many of our investment plans. They had a big science campus they were planning to build in part of Boston, and they're going to slow that down a lot. And I believe they've got a freeze on hiring, at least in some parts of the university. And I believe also they're encouraging people to take early retirements. So I don't think they're laying people off. I'm not sure it's going to come to that. But my point is that they had a run-up in the value of these things. Perhaps that run-up was illusory, but affected their behavior as it increased. And now as it's come down so sharply, it's also affecting their behavior. Perhaps they should do something different. Perhaps they should lean against the wind. Perhaps they should draw down the endowment. But that's not their rules. That's not how they run things. That's not how they see the world. And Harvard is a very well-financed, deep-pocketed entity compared to most of the rest of us anywhere.
But like a real problem as opposed to an abstract problem, if you lose 1/3 of your endowment, universities, nonprofits, they run in part on the dividends or the interest of the endowment. And so the dividends or interest has been cut by 1/3 too. So that's practical. That's a practical amount of cash that you're losing.
That's right. And that's exactly how they see it. There's a payout from the endowment, and there are rules about the payout. But you could say there's a big crisis, and perhaps it's a big opportunity for a university because buildings become cheaper. It becomes land becomes cheaper. It becomes cheaper to put up buildings. Labs are cheaper to build, and faculty are probably easier to hire away from other universities or companies that are in trouble. So you could say this is a great opportunity to expand and to dip into the endowment, to use up some of the capital that you wouldn't ordinarily use, and catapult yourselves forward.
If you're just joining us, my guest is